have our MD and CEO, Sir, Shri Rajneesh Karnatak ji. Towards his right is Shri P.R. Rajgopal, Sir, our Executive Director, and to his extreme right is Shri Rajiv Mishra ji. Towards his left is Shri Subrat Kumar ji, our Executive Director, and also to the extreme left is Shri Pramod Kumar Dwibedi ji, our Executive Director, along with other senior officials present in the audience today. So we all have joined here today for our Bank of India results of Q3 FY26. It's my proud privilege to request our MD, sir, to address this gathering, and after which we'll open the question answer session. So over to you, please.
Yeah. Thank you, madam. So, ladies and gentlemen, good evening to all of you, and a very happy new year 2026 to each one of you. As I share with you the financial results of the bank for Q3 FY26, it is my pleasure to welcome each one of you for the today's press meet. Thank you for joining us. As we step into 2026 calendar year, 2025 stands behind us as a year marked by significant global uncertainty and heightened geopolitical tensions. Against this backdrop, global GDP growth is expected to moderate to 2.6% as per the latest World Bank estimates. For India, the year has been one of resilience and opportunity. Despite the global headwinds, India has become the world's fourth largest economy, surpassing Japan, supported by targeted policy measures for exporters, GST rationalization, and an expanding network of trade agreements. India has steadily strengthened its global competitiveness. Reflecting this momentum, the World Bank and the RBI have projected full-year GDP growth at a robust 7.2% and 7.3% respectively. The RBI has adopted a proactive stance by implementing rate cuts and reducing the CRR, thereby ensuring adequate liquidity in the financial system. Key regulatory initiatives include proposed adoption of expected credit loss framework, proposal to implement the revised Basel III capital adequacy norms, and the transition in a risk-based deposit insurance premium are aimed at further strengthening the resilience and improving risk management and enhancing the competitiveness of the Indian banking sector. We are pursuing a calibrated approach to credit growth. Bank continues to invest in its IT infrastructure and strategic partnerships towards improving operational efficiency and delivering superior customer experience. The balanced emphasis on business growth and assurance will support consistent profitability and reinforce resilience in evolving environment. My speech has three parts for growth processing, etc. The third initiative is the bank has introduced a bouquet of products designed for gig workers. These include, number one, the Star Gig Grow Loan for the MSME loan, and the second being the Gig Gear Up loan, which is the retail loan for the gig workers. The next initiative, fourth initiative, is the introduction of the two new credit card versions. The first being the Celestia credit card, RuPay Premium Contactless, which is a metal card with a single block multiple debit feature. This card is designed for high-end customers and with elevated experience and superior services. The second card is with respect to the RuPay Women's Credit Card, a credit card designed for women with product features exclusively catering to the women's needs. The fifth is the BOI CSR initiative, the Corporate Social Responsibility Initiative. We have formed a trust in that. The bank has partnered with the Social Foundation Trust to oversee and implement the bank's CSR initiatives, both internal and also external. Now coming to the second part, which is the business initiatives that we have taken business, which is there. The global business has grown by 12.54% on a YOY basis from 14.46 lakh crores in December 24 to 16.27 lakh crores in December 25, with incremental growth of 1,81,000 crores. Global gross advances have increased by 13.63% YOY basis from 6.51 lakh crores in December 24 to 7.4 lakh crores in December 25 with an incremental growth of nearly 88,000 crores. Global deposits have increased by 11.64% on a YOY basis from 7.94% in 7.94 lakh crores in December 24 to 8.87 lakh crores as on December 25 with an incremental growth of 92,000 crores. Domestic gross advances increased from 15.16% YOY from 5.46 lakh crores in December 24 to 6.29 lakh crores in December 25. RAM advances, which are the retail, agriculture and MSME advances, have increased by 18.05% on a YOY basis from 3.12 lakh crores to 3.68 lakh crores as on December 25, contributing nearly 58% of the advances as on December 25. Domestic deposits have increased by 12.80% on a YOY basis from 6.79 lakh crores to December 24 to 7.75 lakh crores in December 25. CASA has increased on a YOY basis from 2.77 lakh crores in December 24 to 2.90 lakh crores in December 25 with an incremental growth of more than 12,000 crores, and the CASA ratio has stood at 37.97%. The third part of the speech is with respect to the profitability and the asset quality. Operating profit has increased by 13% on a YOY basis and stood at 4,193 crores for Q3 FY26 as against 3,703 crores in Q3 FY25. Net profit has increased by 7% on a YOY basis and stood at 2,705 crores in Q3 FY26 as against 2,517 crores in Q3 FY25. NII increased by 6% on a YOY basis and stood at 6,461% crores for Q3 FY26 as against 6,070 crores in Q3 FY25. Global NIM sequentially improved by 16 basis points and stood at 2.57% in Q3 FY26. Non-interest income increased by 30% on a YOY basis, stood at 2,279 crores for Q3 FY26 as against 1,747 crores in FY25 Q3. Slippage ratio has stood at 0.16% only in Q3 FY26 as against 0.19% in the previous corresponding period. Credit cost has improved to 0.34% in FY26 as against 0.39% in FY25. There has been an improvement in the asset quality also, with reduction in both gross NPA ratio and the net NPA ratio. Gross NPA ratio has improved by 143 basis points on a YOY basis to 2.26% only for Q3 FY26, and net NPA ratio has improved by 25 basis points on a YOY basis to 0.60% only for this quarter. Provision coverage ratio has also improved to 93.60% in December 25 as against 92.48% in December 24. As on 31st December 25, bank's CRAR has improved to 17.09% from 16% as on December 24. Now to conclude, in tune with the growth of the global economy and guidance for global advances will be for at around 13 to 14%. The global deposit growth will be at around 11 to 12% in FY26. The key priority of the bank will be mobilizing low-cost deposits, accelerate the growth of high-yielding advances, thereby safeguarding the net interest margins of the bank. Our concerted efforts will focus on prudent credit underwriting and strengthening the asset quality and containing the slippages. The bank remains firmly committed to enhancing the operational efficiency and profitability while maintaining rigorous compliance standards and robust corporate governance. Together, these initiatives will ensure the creation of a sustainable value for all our stakeholders. I would like to thank you all for your continued support and your presence here. The floor is now open for discussions and question and answers. Thank you so much.
Thank you very much, sir. Before we proceed for our question and answer session, I would like to request you to please raise your hands. One of our team members would be coming to you with the mic. kindly introduce yourself and your organization. And it's a sincere request that kindly restrict your questions to 2 at a time. If time permits, we'll come back to you for more questions. For all our friends who have joined virtually, we request you to kindly raise your hands. Our concept PR team will unmute you for asking your question. So in between, we'll be taking the online questions also. I hope the concept team and our team is ready with that. So we can start. Yeah.
Hello, sir. Hi, this is Shipra from Financial Express. I have 2 questions. One is, you mentioned the guidance for global deposits. What's the guidance for global advances, and why the revision? Because last year in global deposits, you'd given a 10 to 11% guidance, and you are giving 11 to 12% guidance for global deposits. So what's changing? What's the strategy going ahead for that? And then I'll ask the next question.
Yeah, thank you so much. So if you see our results, we have grown our global business by around 12%. Within that, the global deposit is around 11% plus, and the advances are at around 13% plus. But if you see the delta which we have created on a year-on-year basis, so in this quarter we have reversed the trend, wherein in the earlier quarters, if you have seen the figures, the advances were growing more than the deposits. But in this quarter, on a YOY basis, our deposit has grown more than the advances. Just to share with you the number, on a YOY basis, our deposit has grown by around 92,000 crores and our advances have grown by around 88,000 crores. So now from the Q3 onwards, we have now clearly focusing on getting more of deposits, right? Particularly the CASA deposits and the retail term deposits, because of which in the same strategy, ongoing strategy for Q4 also will have the same strategy and going forth, because we feel that there is robust credit growth happening, particularly in the domestic credit. And if you see the numbers, we have grown our domestic credit by around 15%. In order to optimize the CD ratio, loan to deposit ratio, and also maintain the LCR as per the RBI guidelines, as a part of a strategy, we will be growing more on the deposits. So that is the clear understanding from our side.
And sir, the guidance for global advances?
Global advances, as I said, it would be around 13 to 14%. So since domestic deposit, we are growing at around 15%, but on the international side, because of the geopolitical and other issues from the international center, we are not expecting too much of credit growth in percentage terms. So to maintain the overall global credit growth, we are giving a number of around 13 to 14%.
Right. And my second question is, sir, RBI recently released the PSL norms. What do you make of them? Are there any changes that you see in the guidelines particularly, and what's going to be the strategy for PSL?
So as far as the PSL guidelines is concerned, Bank of India is very comfortably positioned. In fact, after the PSL guidelines, we have been able to improve our overall priority sector advances by at least 2 to 3%. So if you see the numbers, which is also there present in the presentation also, whether it is agriculture, whether it is small credit, any of the parameters on priority sector lending, we have achieved all the targets and we are well above the targets.
Thank you, sir.
So Joel Rebello
Next
from
question, please. Yeah.
Economic Times. I just wanted an outlook on the margins. We know you all have done well quarter on quarter, but year on year it's down. With the rate cut already in December, which has to be still baked in the yields, how do you expect margins to pan out for? And also the same part of the question is, what is the reason why you could maintain margins quarter on quarter, improve from September?
Yeah. Thank you so much. So as far as the NIM and the margins are concerned, if you see our results, so last time we had a global margin of around 2.41%. So this time we were able to improve our margins by around 16 to 17 basis points on a global basis. For the simple reason is that we have done a lot of work as the part of the top management or improving the margins both on the asset side and also on the liability side. So just to give further detailing in that, as far as the advances side is concerned, we have as a measure, we have seen to it that we improve some of our MCLR advances, increase outstandings in MCLR advances. We have also taken a conscious call in shedding some of the low rate of interest advances also particularly in the public sector and the central and state government advances there also. So we have done some churning of the book as far as the corporate advances are concerned. There also the margin has improved on the loan side. And obviously the credit growth in the RAM segment has been very good. That is also helping us improve the margins. That is one part. Second part is on the liability side. There again, we have also done a very conscious call in increasing our retail term deposits, which have grown by nearly 14%. And lot of churning we have done in the bulk deposit side also, wherein we have tried to take new bulk deposits on a lower rate of interest, so that the transmission is there on the lower interest with the cut on the repo side. Because of which, if you see, our interest expenses have also not increased to the extent it should increase, in spite of the increase in the deposit which has happened. And interest income has also improved. So both sides with the improvement, the NIM overall has improved by 16 basis points for us in this quarter.
Look, sir, for the rest of the year, I mean, or in the next 2 quarters, how are you seeing?
Yeah. So as far as the outlook for this quarter is concerned, so the last, the repo rate cut which had happened was on 5th of December 25. So as far as the NIM pressure is concerned, it has translated for only 20 days plus for the December quarter. It will pan out for the whole quarter in this Q4. So definitely there will be a challenge for as far as the NIM is concerned because of this repo rate cut, because exactly 125 basis repo rate cut has happened in the calendar year 2025, which will all get translated in the Q4 quarter, in the full quarter. But definitely as we have done in this quarter, we have been able to improve our NIM by nearly 16 basis points. Same strategies we'll be adopting for improving our net interest income and net interest margins, and we feel that we will be able to protect our net interest margins, global net interest margins, at the level which we have been able to bring at this level as on December.
Sir, just a couple of clarification. Your numbers show that non-interest income is increased because of some revaluation or investments which have increased year on year.
Yeah.
And the second clarification is the provisions year on year also up. If you can clarify why both these numbers.
Yeah. So as far as the non-interest income is concerned, yes, some revaluation income has been built in because of some revaluation happening on the asset side, but that is only a small component of the total non-interest income. Otherwise, if you see, the overall non-interest income has grown substantially on a YOY basis. As regards the provision is concerned, so we have provided optimally as per the RBI guidelines, both on the standard assets and also on the non-performing assets. And whatever provision had to be written back, it is all because of the fact that there has been certain improvement in the standard accounts with respect to the 7th June circular, wherein some write back had happened on the provisions.
Thank you, sir, and thank you very much, gentlemen. I once again repeat that the questions should be restricted to 2, so that we have a large gathering of media friends. So let everybody get a chance to speak. Yes.
Hi, this is Anjali Palod from ET Now. My question is on the CASA deposits. Now, that has come down for the past 2 quarters as well. Do you see that trend continuing, or are you going to be reviving the CASA contribution to overall deposits in the coming quarters? And my second question is on the return on equity, which if you look at the 9-month basis versus last year, that's still 50 basis points lower. Are you confident that by the end of this financial year, you will at least get back to last year levels or even surpass that?
Yeah. So as far as the CASA percentage is concerned, as you rightly observed, that CASA percentage to total deposits is coming down quarter on quarter basis. This quarter also we have settled at somewhere around 38%. But we need to understand that this is something which is not happening to our bank. It's a structural thing which is happening around the system. And the color of the deposit is changing, so it is very difficult to get CASA these days for all the banks. So nonetheless, we have been able to increase our CASA by nearly 12,000 crores, if I tell you in the amount terms. But in percentage terms, yes, overall deposit, it is only 38%, but just to give you a color on our total domestic deposits, only 15% of our deposit is bulk deposit, if you see the presentation, which means that 85% of our deposits are through CASA deposits or through retail term deposits. And as I said earlier, our retail term deposits have increased by nearly 14% on a YOY basis. So because of the structural change which is happening in the economy, a lot of investments are going towards equity market, investments going towards mutual funds, fund, insurance, and also NPS and other kinds of things, there has been a structural shift from the depositor side as far as the wealth management is concerned, and the depositors are now keeping optimal deposits with the banks in current accounts and saving accounts, and mostly they are investing in different avenues which are available to them, and everything is now available digital. So that structural system being in place, definitely there will be a challenge in CASA in the coming quarters also, and the fact that credit is growing and we are growing our credit as a bank, as I said that we have grown our credit at 15% on the domestic side, so definitely we will require deposits to fund that growth, and in order to fund that growth in terms of deposit, definitely if the CASA is not coming up to that extent, definitely we will be raising retail term deposits and to certain extent bulk deposits also.
Thank
As
you very
regards
much.
the return on equity is concerned, so this quarter the dip has been also because of the numerator denominator factor. So some tier bonds were also raised, because of which the denominator effect which is there, but it will stabilize in the Q4 FY26.
Thank you very much, sir. The gentleman, yeah.
Good evening, MD sir. I am Mehul Dani from FinTech Biz News. Any new milestone achieved during the Q3 as far as your IT transformation journey is concerned? And any new digital initiatives planned to be introduced during the current quarter? Thanks.
Yeah, thank you. So as far as the IT initiatives are concerned, so lot of journeys are going on as far as the IT is concerned in the bank. So we have the data lake project which is going on, which is taking care of the artificial intelligence, machine learning, generative AI. So that initiative is also there, and use cases have already started coming. These use cases are going not only to the head office verticals, but they are also going to the field, not only at the branch level, but also to the underwriting centers, which are retail underwriting, MSME underwriting, and also to the agri underwriting centers. And these, the data lake leads are also not only going to the credit side, but also on the liability side for business adoption, and also for the wealth management side, and also for the credit monitoring side, as far as the monitoring of the advances are concerned. And third thing is with respect to the fact that the leads are also going through the data lake project for also structured and unstructured data which is going while the credit sanctions are happening. So data lake project is well established now, and lot of leads are going towards the field people, both on the support side, monitoring side, and also the business side. As regards the other transformation project on the IT is concerned, we have a major transformation project which we call the BOI Tech Snack, in which we are having a transformation of the IT, digital, and the cyber security platform of the bank. Lot of initiatives have been taken. It's already part of the presentation which we have, full page we have given about the digital initiatives. I would just like to share the business journeys within that. So as on date when we speak, 29 journeys for us on the business side we have already digitized and automated. Out of those 29 journeys, if I can share, around 24 journeys are on the credit side, and there are 5 journeys which are there on the liability side also, and in this quarter there will be certain journeys on the wealth management side also which will go automated. Apart from that, there is a lot of automation which has also taken place as far as the cyber security and transaction monitoring is concerned. If you see the presentation, we have already shared that we have saved nearly 50,000 man hours as far as this automation of these things are concerned, and lot of staff which was there at the back end office has been able to get freed itself because of the automation of these transaction monitoring and these kinds of things, and that leads to around 2,000 man days which we have saved nearly. So that is the kind of cost optimization and operational efficiencies we are trying to get. As regards the investment in the IT structure is concerned, we are investing significantly in the IT. If I can just share a number with you, we are investing nearly 10% of our total OPEX, operating expenses, towards IT. So that is the kind of importance we are giving to IT, both on the OPEX side and also on the capital expenditure side on the IT. Thank you.
Thank you very much, sir. I must give priority to the lady first. So let her ask, then I'll come to you, gentlemen. Yes, please.
Thank you. Good evening, management. This is Shrishti Sharma from ETBFSI. First question on what is the kind of retail as to corporate mix you are targeting as you end FY26 and in the longer term? Second question would draw your attention to Finance Minister's comments recently where she mentioned transfer policy for public sector banks cannot be defended, and staff that cannot speak in regional languages, even they are supposed to communicate to the customers. Now, I'd like to understand how is the situation at Bank of India in training the staff to be able to communicate in regional languages with the customer? These two questions. Thank you.
Yeah. Thank you so much. As far as the color in the corporate book is concerned, see, we have a pipeline of nearly around 80,000 crores on credit side, which are due for either final sanction or sanction has happened, documentation is taking place and it is due for disbursement. Within that, the corporate book is at around 65,000 crores. So we have a good pipeline as far as this quarter is concerned and the coming quarter of Q1 and Q2 is of the next financial year is concerned. Within that pipeline, I can share with you that we have an infra pipeline of nearly 20,000 crores within that. So we have a good, robust infra pipeline within that. Apart from that, we have given sanctions for data center, warehousing, green energy, both whether it is solar or wind energy. We have given for batteries, EV vehicles. So all new gen, even for rare earth metal minings also, some of the sanctions have been given. LPG also has been given, LPG pipeline sanctions have also been given. So lot of new sanctions have been given, and apart from the traditional, this is the sanctions which I am telling which are for the new gen industries which are there, apart from traditional industrial sanctions which are there for chemicals, textiles and pharma, etc., which is there. So it's a very robust pipeline and 360-degree across the industry which is there, and some of the sanctions are not only to the domestic corporates but also to the local international corporates also. Corporate share in the book, as I said, our RAM advances are at around 15.5%. The remaining book of around 40% is the corporate book in the domestic credit. Idea of sharing? Yeah, so for the long term, we are targeting that it should be 65-35. For the next 5 years. We have a Bank of India Vision 125, which is up to 2031. In that, we are saying that our RAM book should grow at, should be at around 65% and our corporate book should be at around 35%. For the simple reason, with the revised definition of MSME, wherein the medium enterprises, a turnover of 500 crores can be there, and plant and machinery investment of 125 crores. Typically, funding to a medium enterprise today can be up to 200 crores. Keeping that in mind, we are saying that our RAM book can be at around, should be at around 65 and the corporate book at around 25. As regarding the language issue, which is, as you have pointed out, there also we have set up our policy through the HR department. So we have two kinds of staff present, predominantly the clerical staff. The clerical staff is normally the local staff at the state level only. So there, not much issue of the language is there, any of the state, because they are local staff. Officer staff, definitely there is a pan-India recruitment over there, the language issue is there, but we have already started from the HR department, the language proficiency test and the language proficiency course in various languages. We have already tied up with one institute in Bangalore, through which we are giving language proficiency, this one, a test and also the course to our employees, officer employees, so that they can learn the local language where they are posted.
Yeah, thank you, sir.
Thank you.
Sir.
This is Namaskar, this is Sujata here from Newspress News. So you stressed about the RuPay card for the women. So how different it is from the other banks' cards? Is it superior from the other cards for the women's?
Yeah. So I would request our ED Mishra ji to take this. Yeah.
See, the women RuPay card which is there, it is basically for the women entrepreneurs and the new professionals, women professionals which are there. It has multiple features. Apart from the normal card which is having that launch access faxes, and there are some spa facilities, some other facilities which generally are typically required by a woman. So those facilities have also been embedded in this card, so that would be helpful for a woman. Apart from giving a handsome amount of limit for you are doing the business or personal requirements which are there.
Thank you.
Thank you very much, sir. Yes,
Hi, sir.
Yeah.
Kabir here from Infomist Media. My first question is regarding corporate loan book. So, across the industry, we are seeing that corporate loan book is being very sluggish, but you just said that you're expecting robust demand from domestic. So, how much of that do you expect to come from the corporate side? And regarding that, do you see any impetus being provided by the budget for the corporate loan book to grow? And so, second question is on fundraising. So, you have additional 2,500 crores, I think, from Tier 2 bonds and 10,000 crore from infra bonds approval pending. So, do you expect to raise it in this quarter?
Okay. So as far as the corporate book is concerned, so if you see our slides also, we have grown our corporate book by 11%, which is a double-digit growth. In this situation, it's a very healthy growth as far as the corporate book is concerned. Just to give you a color on the domestic book, which is their loan book. So we have grown our domestic RAM book at around 18%. So retail, agriculture, MSME, retail we have grown at around 20%, agriculture we have grown at around 16%, and MSME we have grown at around 15%. So as far as the coming quarters are concerned, for the annualized for March 26, I have already given a guidance that our global loan book will be at around 13 to 14%. Present, our growth has been at a 13% on a YOY basis. So going forward, we are very confident that we should be growing at somewhere around 14% as far as the overall loan book is concerned, but definitely the RAM book will grow faster than the corporate book. And as regards the other point which was there in the infra bonds, yes, we have already raised 10,000 crore of infra bonds on 12th of December. Another 2,500 crores of Tier 1 equity we have already raised. So another board approval we have for another 2,500 crores. But considering the fact that we have adequate CRAR of 17.09% as on 31st December, and the profit, once we take 7,500 crore of net profit we have already earned up to the 9 months, and once that profit gets translated into the CRAR as on 31st March, it should be even better. So presently our CRAR is also quite comfortable, though we have the board approval, but the top management will take a call as and when to raise the remaining 2,500. Budget expectations. So obviously we expect that it will be a pro-market budget, for business budget, and it will help the economy to grow further, because as you are aware, the balance sheets of the economy and the banks' balance sheets are intertwined. So if the economy grows well, definitely the banks will also grow. So we are expecting that the budget will be a growth budget.
Thank you very much, sir. Yeah, kindly go ahead. You are not audible, Ashish.
Is this better?
Yeah, it's better.
So just to follow up on Kabir's question there on the corporate loans, how much of the 80,000 crore pipeline would be term loans? And also, sir, some bankers have been complaining about the pricing situation when it comes to corporate assets and pipelines. What has been your experience on the pricing front, especially given the fact that, okay, you consider Q4 NIM to be challenging in the current circumstances. So how is pricing really playing out? Because the better rated amongst them, are they coming at a price point which is feasible or amenable from a risk adjusted perspective for the Bank of India?
Yeah. So as far as our credit pipeline is concerned, as I said, we have a pipeline of around 80,000 crores, of which the RAM pipeline is at around 15,000 crores. The remaining 65,000 crore pipeline is from the corporate sector, which also includes the infrastructure sector. So within that, if I tell you that how much is term loan or the remaining is about the working capital, so nearly 60% is the term loan and the remaining is the working capital. So that is the kind of breakup which is there as far as in the pipeline is concerned. But we are very confident that in the corporate book, that as I said, that we have done certain churning also to improve our margins, wherein we had paid some of the AAA rated corporate loans which were at very low pricing and churned it with the other loans where the pricing was better. So this is the same strategy will remain at this point of time also, because we have a healthy pipeline. We are in a position to churn some of our portfolio to a better portfolio, from the low yielding portfolio to a better high yielding portfolio on the corporate side. So this quarter also will have the same strategy in order to improve and protect the NIMs.
So you don't see it sort of having any impact on the risk perspective as you possibly go down the rating of the corporate you are lending to?
Yeah. So if you see our presentation also on the external rating linked advances which are there, so you will see that the majority of our advances, only to 4 to 5% advances are below the investment grade. Nearly 96% of our advances are to the investment grade, triple B and above. Right. So when I'm saying that we'll be churning the advances for better rate of interest, maybe I will shed a triple A advance and go for a double A advance where I can earn 15 to 20 basis point better. So that is the entire thought process behind that. So we will not be entering into any accounts which are, say, maybe unrated or which are having higher risk.
So what is the composition of EBLR advances right now in the overall?
Yeah. So our EBLR advances are at present around 63-64% of the total book, and the around 30% advances are to the are for the MCLR.
So second question, sir, you mentioned about the man hours saved, the man days saved because of tech interventions. What has it done to your hiring intensity? Do you see, say over a medium period, do you see the hiring intensity really going down as you deploy more of tech and more of automation within the bank? And if you can also sort of help us understand with some numbers on how the net employee count has fared this year.
So as far as the hiring is concerned, see, we operate in a very different model, like Indian banks, particularly public sector banks. Just to give you a number, see, we opened 200 branches, 211 branches to be exact in FY25. This year, we are opening 200 branches. Out of it, already 140 branches have been opened. The remaining 60 branches will be opened in this quarter. Next year, our board has already given approval for opening another 200 branches. So when I say that we are opening 600 branches in 3 years, definitely we need manpower. So physical branches in India, obviously you need staff over there, whether it is our sub staff, whether it is our clerical staff, whether it is officer staff, branch heads. So in that way, the manpower will not be reduced, but definitely yes. As far as the back offices are concerned in the bank, where transaction monitoring and other kind of back offices are there, because of automation, definitely there some staff rationalization would happen, definitely. But as far as the customer service at the branch level is concerned, definitely we need to have optimum staff over there to give good customer service and experience, so that customer grievance does not come.
Thanks, sir. May I have a question from you, young lady?
Yeah. I'm Shreya Jagdishan from Debt Circle. I have a question. So certain PSU banks have been redeeming their 5-year-old bonds. So since you also had issued 2 bonds in 2021, which have a call option after 5 years, that is 2026, in their anniversary, which is again January. So are you also planning to redeem your bonds, since the coupon rate was pretty high back then, around 9% for both the bonds?
Okay, I'll request my ED Subrat Kumarji if he can just share his thoughts on this.
Yeah. So yeah, definitely we are looking into it, and we'll take a call, appropriate call we'll take on that, definitely.
Okay.
Sir, I am Nandakishore Bhartiya of Nav Bharat. Sir, मेरा प्रश्न ये था कि now this present atmosphere is very fearful. Market is going down, bank interest rate on deposit is going down, and the real estate prices are booming. So where investors should go? Where they should deposit their savings? You are also reducing your interest rate on the deposit. All banks, not only you.
See, if the rate of, if RBI is reducing the repo rate, and obviously the deposit rates are coming down, जैसा आपने कहा, rightly said, but loan के rates भी कम हो रहे हैं ना. So if you want to take a loan, vehicle loan, housing loan, personal loan, education loan, obviously the rate at which you pay for these will come down also, have come down in fact, and obviously your EMIs will also come down. As far as the investment opportunity is concerned, so there are huge number of investment opportunities under the wealth management which are available today for everyone, and with the kind of economic growth which is happening, the kind of way we are coming into a developing economy and the 4th largest economy in the country, And with the way middle class and HNI class is growing in the country, definitely there are huge opportunities, and lot of financial literacy also is happening in the country with respect to that. So number of avenues are available for the investors to invest, whether it is equity market, whether it is mutual fund, whether it is gold, whether it is silver, commodities, whether it is real estate, whether it is NPS or insurance. So ample opportunities are available as on date. If you compare it for the last 20 years to today, huge number of opportunities are available to the investors. And they are investing also. If you see the data, the way AUM of the mutual funds is growing, AUM of the insurance companies is growing, AUM of the NPS is growing, and the way the investment in gold is happening. So all these opportunities are available with the investors, and good returns are also coming for everyone. The data is there for that. Definitely, I think that it's a win-win situation for everyone. So depending on the risk appetite, definitely people are investing.
Thank you very much, sir.
Just one additional question, ma'am. So just wanted to know, during the quarter, did you make any provisions for ECL or the new labor codes that have been implemented, and the source of the slippages during the quarter, sir?
So ECL provision, though, I don't think we have made in this quarter. No. So that is under still draft and under discussion kind of thing. So no provision for ECL particularly has been made in this quarter. We have made some provision on the PLI, performance linked incentive for employees. That provision we have made in this quarter. As the other part was with respect to the
Slippage.
slippage is concerned. Yes, slippage we have closed at around 1,100 crores. It has increased by around 200 crores from the last quarter. But nonetheless, the improvement has been there in the overall slippage ratio. Is concerned from, if you compare from December 25 to December 24 to December 25, the slippage ratio, it has improved. But because of one single account, which was a road account, which slipped to NPA, it was a stress account since long. It has slipped. It's a consortium account. It has slipped with other lenders also. Because of that other aberration of that corporate account, our slippage ratio has remained the same. Otherwise, I can say that the asset quality has been quite good, and it is improving. If you see the gross and net NPA for us, credit cost also for us has come down on a year-on-year basis, and the percentage terms gross and net NPA, as I said, has improved. And just to give you some color on that, if you see the SMA book of the bank, the SMA book, which was in the last quarter at around 6,500 crores, it has come at around 5,600 crores in this quarter, and the SMA percentage above 5 crores is now only 0.75% of the global standard loan book. So that is the kind of improvement which has happened in the overall asset quality and the stress book. So we are pretty comfortable that Q4 will also be better for us, and the numbers as far as the fresh slippages are concerned, we'll be able to maintain the fresh slippages.
So how much of the 1100 crore was from that one particular account?
How much was the?
Of the 1100 crore was from that one particular account, the consortium lending account, which...
So the NPA for us, it was around 130 crores.
108, so that slippage, no, you are talking.
Yeah.
108 crores.
Okay,
yeah.
okay. Thank you.
Okay.
Road sector.
Road sector.
Thank you, sir. Can we take a question from, the lady in white? Shipra, you have already asked, so let us give her a chance.
So have you calculated the impact of the ECL norm? That how much impact will it have for you? And also the same question, labor code. How much impact are you going to see? And also the guidance for the next quarter in terms of NIM.
Okay. So as far as the ECL framework is concerned, yes, we have already started the working based on the present guideline of RBI is concerned. There we are expecting that the impact should be at around 2% for our CRAR. So our CRR present is around 17.09%. 1% of that comes to around 4,600. So we expect that the impact should be at around 2% of the CRAR on a 5-year term, which means annualized basis 0.4%. However, having said that, I can only say that we have already made a profit of 7,500 crores in the 9 months. So it will not impact much on the overall CRAR, that EACL, and we'll be able to absorb it in a very comfortable manner. As regards the NIM guidance is concerned, so as I said that we have improved our NIM from 2.41%, which was their global NIM as on September, to 2.57% in this quarter on the global side. With the kind of pressure which is already there on the NIM, still we expect that we should be somewhere around in the Q4 at around 2.60%.
Thank you, sir. Friends, we have time only to take 2 more questions, the last 2 questions.
So this is just a follow-up question, actually. Shipra here again. A couple of months back, you did show some interest in listing your mutual fund and life insurance arms. Any update on that?
Yes. So as far as the listing of these 2 subsidiaries is concerned, presently, though, it will not happen in this financial year. So definitely, we are planning some of the things, but not in this financial year.
Okay. Thank you.
Thank you.
Surya Shakti Initiative.
Surya Ghar Initiative. Kuch hai? Any numbers we are having at present? Presently, we are not having the numbers, but we can share with you separately. Yeah.
And how are you supporting the gig economy?
Yeah, gig economy, already we have given the product to the field, and definitely certain at the field level what feedback we are getting from the branches is that a lot of traction is coming from the gig workers side, and they want to avail credit, because there are many of the employers who want the gig worker to have their own vehicle. So that is one thing which we are seeing. So over there the gig workers are appearing our branches that they want a 2-wheeler or a 4-wheeler for their, because the employer says that you need to own a vehicle if you want to work, kind of thing. So that kind of traction we are seeing, and some of them are also coming for some personal loans and other kinds of things. So we have a very robust product which we have launched both on the MSME side and also on the personal loan side for the gig workers, and definitely the way we are advertising through social media and other kind of things, we expect that there will be traction in this portfolio also. Thank you.
Thank you, sir. This is the last question coming up.
Thank you so much once again. So speaking of the number of working days for bank employees, it was the second and fourth Saturdays were made off, and if you see, we keep coming across pieces of bank unions going on strikes for making all the Saturdays off. Now, IBA is still considering it as what was told back in 2023 when alternate Saturdays were made off. As per you, how feasible do you think it is to get all the Saturdays off, and what are the discussions like at the moment on this particular ground? Thank you.
So IBA has already recommended to the government for the 5-day week in the previous bipartite settlement which was done in the year 2025, right? Early 2025, end of 24. So already it is recommended. It's the government call now to decide on that.
So, but will it impact the work at the branch level, or is it manageable even if all the Saturdays are off for all the employees?
So with the kind of automation which has happened, mobile banking, internet banking, ATMs and all the digitization which is happening, so we feel that it should not impact much on the customer service side, because majority of the kind of people who have onboarded on mobile banking and digital banking, many of the customers are doing through digital channels only, and if the cash withdrawal is required, the ATMs are there. So we feel that it should not inconvenience the customers as far as customer service is concerned.
Thank you, sir.
Okay, thank you very much, ladies and gentlemen. Sir, I request you for a closing remark if you wish to say something, or else we pack it up.
No, I have said already everything. Thank you for joining and thanks for coming. Thank you so much.
Okay, sir. It's my privilege to thank our MD, sir, and the top management sitting here, and all the ladies and gentlemen from the media who have made it possible to come here. So thank you very much, and we'll be joining for the analyst meet shortly after 10 minutes. Thank you very much.